Welcome to the Retiring Real Estate Investor podcast, where we will discuss how to defer taxes on the sale of your property, earning passive real estate income, and everything you need to know to go from active investor to passive investor. Join us as we interview passive investment sponsors, explore the journey of other retiring real estate investors, and share our due diligence process we perform to select passive investments. Investment advisory services provided by Insight Investment Advisors, LLC, a registered investment advisor. This podcast is only intended for clients and interested investors residing in the states in which we are registered to provide investment advisory services or exempt from registration. Please contact us to determine if the firm provides investment advisory services in the state where you reside. All content on this podcast is for informational purposes only and should not be considered investment advice. Material presented is believed to be reliable sources, and no representations are made by our firm as to another party's informational accuracy or completeness. Insight Investment Advisors, LLC and its representatives do not provide tax or legal advice, and nothing herein should be construed as such. Always consult with your tax advisor or attorney regarding your specific circumstances. Welcome to another episode of the Retiring Real Estate Investor podcast. I'm your host, Brandon Bruckman. I'm very excited to have George Roberts join us today. George, how are you?
Fabulous, Brandon. It's great to be here. Thanks for having me on the show.
George, you are a multifamily syndicator, but I think you're a lot more than that. So I'd love for you to spend some time, give an introduction a little bit to our listeners and tell them a little bit about your background.
Sure. Not sure where you want me to go with that, but I started out in bioscience. I became an award-winning data scientist, learned to just love the entrepreneurial life through starting a construction company with my sister. And I also do some investing on the side. I've invested in early stage companies and many things, including a drug rehab facility. So just love the game of investing.
Oh, yeah, there's a lot there to sort of unpack. What gave you that? Was it really that love of entrepreneurship that kind of gave you that transition? Because with your background, I mean, you could be doing literally anything anywhere.
Well, more than anything, I really loved to be in a very technical position. I did pretty well. I was a very heavily cited bioscientist. I was enjoying myself, but it's really hard to maintain employment in a field like that, and had to switch jobs every few years. So I got to see a different side of life, and it wasn't really so much the money, but just really the freedom and the excitement, being able to chart your own course. I do sail. I'm a pleasure sailor, so I love those nautical analogies.
No, it's perfect. And I think it's sort of a similar background that our listeners have maybe heard from me before as well, where it's, I just can't do the W-2. I think it's great. It works really well for a lot of folks, and it's certainly helpful in learning and starting your career, and it's nice to have a paycheck. But man, that freedom aspect it's hard to come by.
Right.
And it means so much to be able for us to have this chat today. I mean, this is something we wouldn't do in our day-to-days.
Right, absolutely. I think nothing about scheduling a meeting at 1:30 Eastern time. Just do it.
Just do it, right? We'll just do it. We'll have some fun with it. So talk to us a little bit about maybe let's take a spin on the syndication side a little bit. Where are you guys focused? What sort of markets, and what are you seeing currently in this marketplace?
Well, I'm focused sort of on the middle of the country. I like smaller markets, so I don't mind a tertiary market. Sometimes you can find way better deals out there where not everybody is looking. You got to turn over a lot of stones if you want to go find things in Atlanta or Dallas, Fort Worth. And I really like Tennessee and Kentucky. They've got great deals in terms of rent compared to median income. Having those low ratios is really valuable because you've got some room to run. And when you look at affordability, there are just a few places in the country that you can really go. Midwest is affordable. And there's certain places in the South, not the deep South, not the warmest places like Miami. Mm-hmm. But if you're willing to look in some of those places, again, I'd say really it's that middle band of the country, lower or the southern part of the northern states and the upper part of the South.
Mm-hmm. What sets some of those tertiary markets apart? So I would imagine that it's rolling through my mind. I imagine your background in data is probably very helpful in you determining what tertiary markets
Right.
make a lot of sense and which don't. Can you talk about that a little bit?
Yeah, well, more than anything, I usually go off of personal connections. I've got a huge network, as you might imagine. I do have my own podcast. I have events all the time, both in person as well as online. But I do also, of course, do a lot of analysis on the markets. But one thing that all these markets share in common is the fact that you do have a lot more mom and pop operators. And that for me is pivotal. Again, we don't know where interest rates are going. They may have peaked, but who knows if inflation is not killed. And look at the 1970s. We had two major runs of inflation. And it got down to about 4%. So when you look at the graph, it's like, oh, wow, we're taking a breather. Like, no, it was still
Mm-hmm.
pretty much insanely high, even during that breathing spell. So we don't know where things are headed yet. I don't want to have debt that's going to kill me or kill the returns later on.
So then that really comes down to, as you're looking at, all right, so we're in a tertiary market. We like what we see there in that market. You're looking for the mom and pop sort of operators there that frankly may be looking to sort of get out of this game a little bit. Maybe they've managed that property 20, 30 years. And then you're sort of looking at this from a risk perspective, right? You're sort of taking a peek at this and saying, if I can continue to add value to these properties with manageable debt, you can kind of navigate any sort of interest rate storm, correct?
Yeah, absolutely. And look at the sort of deals you're going to find in these big markets. You want to find something that has $200 or $300 below market rent. Are you going to find that where one's looking? No. You have to be willing to go out there and turn over a lot of stones. So that's what I've been doing, and through my network, what my people have been doing and helping me do.
No, that's outstanding. So when you think about management of that facility, what are those first few things that you look at if you take over one of these sort of mom and pop sort of operations? What are those big things that you look at immediately? Or like, well, we can make some improvements here.
Well, everything. I mean, you may be able to do better in property management, having more units in the area. Got to look at everything, insurance, et cetera, but look at what sort of amenities people are looking for. A lot of times you have something that's run down, and just getting it up to standards, whatever that means, whether it means putting in new flooring, could mean new countertops, might mean new cabinets. But what are people expecting? What sort of a differential can you get? So I do a lot of market research and do a lot of pulling of comps. One of the things that I would have to say, I'm critiquing the market. I see people doing a lot of underwriting, spending a lot of time in spreadsheets and very little time justifying the numbers in the spreadsheets.
Oh,
So I really focus on those comps.
I gotcha.
But to
That's
get
right.
back to the management of all again,
Yeah.
yeah, you also have to look at things. I mean, in my analytics, and when I do look, when I see people say like, "Oh, we got below market rents," oh, do you? Right? So first, look at the comps. Second, how long have people been there? Do you have people there that have been there for 3, 4, 5 years? If not, you probably don't have below market rents. How many
Mhm.
people are month to month? When I see things like this, when all that stuff lines up, those are sorts of mom and pop deals. I know that I can just walk in there, and there's not going to be any economic storm that's going to knock these returns down.
That's see, there it is. That's extremely interesting because yeah, that is a term that gets thrown around a lot in the spaces. Well, we have below market rents, and well, what does that
Mhm.
what does that mean? Do you really have that one? But what is the real definition of that? And I think you define that well. You're looking for some characteristics around that would indicate yes, I do have that, or maybe I don't necessarily, right? When you look at you mentioned spending a lot of time in spreadsheets, and maybe people are spending a bit too much time in those. What are some of those other indicators that you're looking at? Is it this dramatic rent growth that we see in some deals underwritten?
Well, it is. And first of all, as regards spending too much time in spreadsheets, what I see is that people are just not spending enough time weaving the narrative. So somebody
Mm,
who has spent a lot of time in spreadsheets himself, a lot of time programming, building models, statistical models, et cetera. I love it. Yes,
yes, I've been
you know
guilty
what
of
I'm
that
talking
too.
about. It's really the story you tell, right? I mean, if you
Mm,
go to upper leadership and you say, I've got this model, and you can explain all of the machine learning behind it, and you can explain why it's cutting edge technology, that is going to get you nowhere. And for good reason, too, because there
Mhm.
are a lot of people that can build cutting edge models. The question is garbage in, garbage out. How much do you understand the market or the industry, regardless of where you're building your models? I mean, how much do you really have an intuition? Because otherwise, you are just going to fool yourself. And probably you're not going to fool anyone else, is how this works. It's easy. You fool yourself. It's very, very hard to convince other people of numbers that are not wrong. So if I was going to critique one thing in the industry, I would say just please give me what is the narrative of this property?
Mhm.
Don't throw a lot of numbers at me. Do we have below market rents? Do we have poor operations where people are just spending way too much? They never put in LED lights and low flow water apparatus. So what are we really going to do here? You know, is this a matter of that we've got somebody who wants a price, but they're willing to give such great terms that it doesn't matter? If you can't really give me a narrative, it's really hard to get in there. I'm really doing your work at that point.
Yeah, and it is sort of once we get to the narrative of what you're actually going to do, doesn't this become a little bit more simplistic? Of hey, there's only so many value levers that we can pull here. Which ones are you going to pull, and explain to me how you're going to do that?
Well, exactly. And if it's the case that, you know, we could put in concierge trash and there's a possibility that we can put in, you know, a cell phone tower, and you've got five other ideas of what we can do. You've got a courtyard, but, you know, nobody planted any flowers. You know, I get it. But again, yes, you got to have that narrative. And without that, with that narrative, then it's only a matter of just checking the boxes. At that point, all I have to do is verify that what you told me is true and we can move forward.
Gotcha. Now you mentioned kind of the Kentucky Tennessee area is of interest. Now I imagine you're not personally located in those markets. How important is it when you're thinking about that property manager, or is that something that you guys have vertically integrated with you that is on site and executing some of these changes?
So for me, boots on the ground is absolutely essential. I would say it's a sine qua non for just about anybody who's serious in this business, anybody who's going to
Yeah.
last even a minor economic storm.
Hmm.
So I do have a great partner out there, Tom Kirkpatrick, part of, or formerly part of Horizon Multifamily. We've worked together for years, and he helped to find an amazing, actually, he was the one who found an amazing deal out there in Jefferson City. Great tertiary market, 30 minutes outside of Knoxville, and just beautiful. Just
Hmm.
kind of deal that I want to be a part of. I got to be a part of a deal in Louisville, Kentucky. So again, the idea is that I keep meeting people who have great deals and who have a similar mindset, looking where other people aren't.
Hmm.
Now, as far as, you know, what are we going to do? And we're, first of all, I should let you know, I live in Michigan, so I do live a far site away from many of the properties I manage. My first property was in Orlando, and one of our partners moved down there to manage it. So,
Oh, wow.
absolutely, boots on the ground, 100%. And then if somebody brings me a deal, I don't want people to think like, well, you know, hey, I've got this deal and it's in Missouri, and, you know, will you do anything out there? You know,
Mhm.
maybe if you're the boots on the ground and if it makes sense. So yeah, I've
I
actually got stuff all over. So Orlando, 90 minutes south of that, I've got one in Kansas City, Kansas, actually Overland Park,
yeah.
and it's, you know, all these things, they just keep me pretty busy, but I'm not too spread out yet.
Yeah, there you go. And that, but you have the sort of the secret sauce there. The best part of that plan is having the boots on the ground. I mean, personal examples here. I'm in Milwaukee, Wisconsin, as listeners know. Boy, oh boy, I've seen some comp reports on properties in Milwaukee, and I'm going, those four properties you comp to this property are not the same because they're in vastly different places and
Right.
neighborhoods. Neighborhood to neighborhood here is different, and if you don't have that local knowledge,
Yep.
you wouldn't know any better.
Well, 100%. I'd love to expound on that because,
Please.
for example, in Avon Park, you can find some really great, when I say great, I mean unreasonably great comps just a few
Mhm.
minutes away. But you got to understand, I mean, proverbially the other side of the tracks, or it's next to a different lake. uh, you know, wow, it's just amazing how if you don't understand, and a lot of things you can do, like go to citydata.com, and that'll
Mhm.
break it down to census blocks, and those census blocks are small, and when you look and you see that the house prices, you know, here versus there differ, or you have different median incomes, those are sorts of cues to say, like, wait a second, I can't pull a comp from there. But of
Mhm.
course, and I don't want to just cut down brokers because they're wonderful. But when I see people give me underwriting and they used the comps from the broker, usually, I mean, there might be one or two that are close but better,
Mhm.
and there's usually three, four, or five that are just like sky high. So, if you're newer out there, just don't do that, and make sure that you are corroborating all this, especially if you don't live in the state. Make sure that you're comparing similar census blocks.
Do you think there's enough? I'm always curious about this as someone who is investing afar and is looking at the data first, but may not be on the ground all the time as a passive investor and is looking from a distance. Do you think there's enough there, at least in the publicly available data, for me to look at a variety of comps and go, yeah, I don't like that one. Yeah, that one makes sense. Or is it so critical to have that local knowledge that there's just not a way to pull that information? You got to be there.
Well, there is no making up for local knowledge. I mean, I've heard of Neil Bow actually paying somebody to go down the street with a camera. And he'll say, hey, I want you to pan both sides of the street.
Mm-hmm.
This shot should take X number of minutes. And I want you to start at this location and end at that location. And that's all wonderful. Google Maps will not do that for you. So
Mm-hmm.
having somebody who can drive the area, hopefully, see and hear and tell you things that you might not know. So there certainly is a limit to data. That said, I don't think most people are pushing the limit of data. For example, I was looking at comps this morning and I was looking on apartments.com, and it looks like the place was from the 1970s. I went over to Apartment Guide and you can see that it's been completely renovated. So if
Uh,
somebody had just taken everything on face value and said, hey, they're getting 1100 for a two bed out here, way in the middle of the Midwest. And look at this. I mean, you've got an efficiency with white appliances and a parquet floor and carpeting, and the carpeting's old. Yeah, you need to go further. You need to pick up the horn. Go call the property manager. Ask. Hey, well, that's kind of high. Do you have any unupdated units? Find out what's the range. You want to use. I mean, you want to use as little terminology, I should say, as little terminology as possible. Try and sound like a renter. I'm looking for a place. Don't say I'm looking for a 2-1.
don't tell them what IRR you're looking for. What are my hurdle rates? My
Yeah,
cap rate.
definitely don't ask for the
Don't
perfect
explain.
IRR, and definitely
Don't know
don't
what you're talking
ask.
about
Would
anyway.
you say that this is? Don't ask if this is a Class C apartment in a Class B area.
Yeah, tip number one: do not do that. This is such an important point, though, because you can easily fool yourself. Right, here we go again. Right, this is kind of back to your narrative of like, what's an easy way to fool yourself? Well, use one data
Right.
source and confirm the bias or thought process you already had in the first place. That would be an easy way to do
Yeah.
it. Or you can look at multiple data sources, right, and really dig in to make sure
Right.
that you know what the answer is.
Well, yeah, Brandon. Let me give you my favorite quote from Peter Lynch, One Up on Wall Street. So if you've studied Peter Lynch, I see you're nodding your head. I hope out there you know who I'm talking about. If you don't, look him up. The guy's amazing. Now, he had a quote about how most people will do more research into an appliance than into a stock purchase. And when
Mm-hmm.
you consider the appliance might be $1,000 and you might be putting 10, 20, $50,000 into a stock, it's ludicrous. I mean, the
Mm-hmm.
first hurdle you have to pass is, have I put in as much research as I would put into an appliance? So
Mm-hmm.
yeah, definitely you're going to want to look at as many sources of data as possible. Don't forget about the local approach though. Boots on the ground mean a whole lot.
We'll link that up for folks that are not familiar with Peter Lynch. They definitely should be. I mean, what a great quote is that we, even as, and I kind of emphasize this with some pushback, I think, from the community, even as a limited partner, as a passive investor, man, we need our criteria and checkbox to go through too. It may not be as detailed as us calling the building, although I'm not against that, and asking,
Mhm.
and acting as a renter, not against that. But man, I really encourage folks to have a deeper due diligence checklist on not only the deal but on the sponsor. Do you find a lot of passive investors asking you about yourself as a sponsor? Are they going through a good enough checklist to make sure that they're comfortable with you as a sponsor?
Well, there's at least two sets of criteria that I use for your sponsor. Yes, you want a track record. You want to know this person has been around the block before. And but in addition to that, and I think this is what many people forget, is how personable are they? Do they answer your calls? Do they answer your questions? Because if somebody's not answering your questions right now, well, then what's it going to be like after you
Mm-hmm.
wire the funds?
Mm-hmm.
Forget about it. You also have to consider what sort of an investor you are. Now, I am an active investor, and half of the reason I invest in deals is because I want to learn something. So I
Mm-hmm.
go out and I find deals that promise a high IRR. I go out, I check, and I make sure, yes, I believe that. I'm willing to believe that this is a reasonable likelihood. I see that it matches my risk profile at the time, which changes all the time. If I've got enough cash flow, obviously I can do some different things. But I'm there also to learn. So
Mm-hmm.
I've invested in all kinds of things. Like I'm in a triple net deal right now. I've never done one of those. I understand the theory behind it,
Mm-hmm.
but actually seeing somebody go out there and execute on it, that's huge. So
Mm-hmm.
you have to decide, are you somebody who maybe you're at the I just want to live under a palm tree stage, then
Mm-hmm.
maybe getting your questions answered is not such a big deal.
Mm-hmm.
If you're earlier in your career and you don't have as much money and that's your only $50,000 you have to rely on, of course you shouldn't be doing this in the first place, but
Yes.
but you get the idea. There's a quite a range of situations. So you have to decide, what are you looking for? Does this serve me in terms of cash flow, potential IRR? How believable are the numbers? What are the risks? And again, are you getting your questions answered? So I've been in the business for a few years. I've been a landlord for over a decade. I've been in construction for over 6 years. I have been a multifamily owner for over 2.5 years. And I have been a syndicator for well over a year. I mean, you should also check, are people willing to put their money in first? Not just are they putting their money into this deal,
Mm-hmm.
but I was going to JVs before I included any outside investors. So again, I think there's a longer list than is generally acknowledged.
Mm-hmm. Mm-hmm. Yeah, and as sort of a go between investors and sponsors, we can't emphasize that enough. Is that we need a good criteria set. We need those questions answered up front, and then if they're not, then if we have a communication problem. That has been one of the most frustrating things that investors have experienced is not even the performance of the deal, but sometimes the lack of communication or the lack of expectations being met on a communication front
Right.
holistically overlooked. I think from even from the investor perspective, and we try to emphasize this with sponsors, is please over communicate about what's going on and updates and what to expect. Makes things
Right.
go so much easier
Yeah.
than the opposite.
Not nearly as widely acknowledged as it should be. I mean, when I interview people on my podcast, for example, I love it, particularly when people offer, hey, I got into this trouble with this deal. This is how I
Yeah.
fixed it. I had a deal that lost money. This is what I did after that to make sure that that was much less likely to happen. I
Mm-hmm.
love it when I have a syndicator that communicates to me as a limited partner and tells me, hey, we got delays. We couldn't get the construction permits. We're going to open 2 months late now. Your check is going to be delayed. But
Mm-hmm.
seeing how they deal with that and exactly what sort of problems, are it's key because not only does it speak to character, but it also tells you a whole lot more in a much shorter period. Just how good is this person at navigating difficulties?
100%, 100%. Because we expect, from my seat, I expect someone who operates a certain amount of deals. It's just math. At some point, something will go wrong. These things are too complex and complicated for everything to produce massive returns and be easy. There will be complications. There will be holdups. How do you deal with that? And we always, when we start peeking through track records, longer track records, we see things. And if they're not being addressed immediately and talked about very openly, we flag that like that's an issue, right? We want to know about
Yeah.
that. And it tells us, you're absolutely right. It tells us a lot more about a sponsor of how you handle the bad deals than how good you tell me everything is flying on the good stuff. Yes, we do need good things and we want good performance, obviously. But there's always going to be something, and we want to know how folks deal with it. You mentioned earlier, I want to spin you back a little bit. You mentioned some of the syndication, ownership, multifamily, investment JVs. You also mentioned construction a little bit. Are you still involved in that? Are you looking at construction a little bit differently in this kind of interest rate environment? Is that becoming more of an emphasis as to look at construction, or is that becoming more difficult?
Well, certainly it's becoming more difficult, and that's why we have fewer players. A lot of people
Mm-hmm.
got washed out in 2008, and that's why real estate is such a good deal now. And I do believe it is still a good deal. We have a tremendous housing crisis. And just as it looked like we were going to get up to 2 million housing starts, those starts and permits crashed down to just under 1.5 million along with completions. So now we got all three lines uh, chasing one another at 1.5 million. So what that means is that we are not chewing through the backlog, and we are creating households quicker than ever. We have immigration to this country, both legal and illegal, and more people and pent up demand means that we have households that still haven't been formed. So I do think it's a great place to be. Interest rates, yes. I do think about interest rates a lot. My sister and I and brother-in-law, we're Walnut Grove Homes. We are actually self-funding all of our construction. Now, it's a little bit conservative for my taste, but again, hey, I suppose that it's better to be a little more on the conservative end than to be, brought along into something that you're not, 100% down with. So we know that we are going to be okay with this. If we had to just hold this project and we said, darn it, we can't sell these last few houses right now. It just doesn't make sense. We'll rent them out or whatever, or just wait until we get the price we're looking for. We can do that. And a lot of builders can't. So it's a real luxury to be in that position. And that's a position that we've really worked hard to be in. I think anybody out there who's hearing, self-funded in construction is probably scratching their head. Wow, that is a lot of money. I can tell you, I mean, it cost, roughly maybe like $1 million just to do the utilities and lay down that street. I mean, are you kidding me? People wonder why the returns are so good in construction. Well, how many people are willing to put $1 million underground before they see a single sprout?
Mm-hmm. Mm-hmm.
So yeah,
Not
for the
many.
builders that can continue,
Yeah.
yeah, for the
Not
builders that
many.
can continue, and that's a farming analogy, of course, right? I mean, the farmer does the same thing. Farmer plants a seed, puts a lot of money into plowing and watering, and doesn't see anything for quite a long time. Anything could happen: hail, weather, drought, and nothing comes back. Same thing going on here with construction. So for the people who can weather it, it's a great place to be. So I will continue to do that, but not really looking to expand in there because I've got a lot of money in construction at this moment, perhaps after the current. But as for how much I'm really involved in that, not very much anymore. So I helped to launch the company, but realized I really want to have my own gig. So hence the multifamily. I saw something where, hey, I can keep my six-figure technical job a little longer. Let's just ramp up with this rather than construction, which is you go from one day from you've got your white collar one day, and the next day you had better be willing to put on your construction cap and be out there and make sure the crew is doing what they're doing.
Yeah, my hard hat is here somewhere. Yeah, it's definitely it's interesting to us from an economic perspective in that you are creating something from nothing, and there should be economics for that, and there should be good economics for doing that. But man, is it hard? Man, is it difficult? And so we kind of look. I'm looking at those same numbers that you are, and looking at these housing shortages, and I'm going, wow, we've had a housing shortage since 2008. This is a long time. It seems like this is just gonna continue as we continue to see, as you highlighted, more demand. So what an interesting sort of space to be in. And I like the take that you have in that. I have not heard of all cash, not taking that financing.
No, it is a rather
Not heard of
unique
it
way of
ever.
doing,
That's
but
so interesting.
it's what we're doing. We're going to make a
Yeah.
profit, and we're definitely not going to get soaked.
Yeah, exactly. Because I have this sort of image in my mind of this half built building, right? Because of the leverage situation, right? And
Mhm.
you're never gonna experience that because you've made that decision to be more conservative in a time of uncertainty, which frankly makes a lot of sense if you're able to do it. Is it the same sort of last question on construction? Because I know you mentioned you're kind of spinning away from that a little bit. But is it the same sort of markets that you're looking at? Will you look at some of those tertiary markets and be like, look, there isn't the proper supply here. We can do something from a development perspective. Is that sort of the thesis?
Well, where I am looking at possibly doing future construction projects might be in build to rent. Again, it's this tremendous
Mhm.
housing crisis. You got Airbnb, Verbo eating into the stock as well. You've got all these long term trends that are just giving us a tremendous crisis. So I think that build to rent makes a whole lot of sense. And that would definitely be in some rather different markets. Usually you want to go basically at the edge of a city. So, edge of city country, that's a place where you can buy a lot of land. You can
Mhm.
you need to build a lot of units to really make this make the maximum sense.
Mhm.
And so that's where you see it happening. So these would be different markets than I'd be looking for multifamily, generally speaking.
Interesting. Okay, the built to rent angle. Okay, gotcha. That makes a ton of sense. I see us peaking up to about a half an hour here. I want to ask you a million questions about Michigan and Detroit. Now, are you in? I know your bio Wayne State, right? That's in Detroit. I've been there. I visited last year. Is that where you're at? Are you in which outlying suburb? Maybe are you in? Where are you
Well,
actually
yeah,
physically
I'm a little north
located?
of Detroit. I'm by Lake St. Clair.
Ah,
So
okay.
if you come out to visit me, it's a bit of a
Yeah, man.
drive. You're going to drive, maybe an hour past Detroit
Gotcha.
to get out my way, but 40 minutes at least, 30 minutes. But it's a nice place. It's out by Lake St. Clair, one of the busiest lakes in the world.
Mhm.
But I actually go down to Ohio to sail.
Ah, okay. All
Lake
right.
Erie Sailor. Yeah, we got a lot of
I
exciting stuff out there. So
I got you. I got you. Yeah, Detroit was a market that sort of popped on our radar with the outlining stigma associated with Detroit. What we saw when we showed up was a heck of a lot different than I think what we expected. So it was very, very encouraging. Are you feeling the renaissance there as well?
well, certainly there is a Detroit Renaissance going on. A lot of things have happened. The downtown has always stayed nice and livable. The neighborhoods, that's something that's been really on the radar for years, but something that I think is beginning to happen. I see some great things happening in Jefferson Chalmers, which is right by Grosse Pointe, and some other
Mhm.
places as well. So, Brandon, you or your listeners, if you got anything going on in Detroit and you want a local perspective, although I don't currently invest in Detroit, we're building houses in Troy, Michigan. That's a outlying suburb. But I'm somebody who could potentially give you a general opinion of the area, hook you up with local investors, and possibly even drive the area and give you some of that intel we talked about earlier.
Yeah, I think uh, everywhere you need the intel more so than ever. Definitely in Detroit, as we learned on our visit. Yeah, come for the investing, learn about the neighborhoods, stay for the convenient walkable sports venues from any almost any hotel downtown. And then still, I will contend my favorite style of pizza is still Detroit style pizza. So I got apparently the original when we were there last time, and just a winner every day of the week.
Yeah, we love our square
Everyone
deep
in
dish pizzas. It's a lot of
oh,
fun.
oh my god, absolutely amazing! That crust along the outside and oh man, yes,
Yes.
sign me up over and over again. George, it's been awesome. Where can people follow you? I know you have a podcast, so please promote that. We'll include that in the show notes. Where else can people learn more about you and the great stuff you're working on?
Sure, I've got a huge presence on LinkedIn. Please follow or connect. I also have currently Horizon Multifamily going. You can come to horizonmultifamily.com. I also have a major YouTube channel, if you don't mind me promoting for a moment. It's George Roberts III. That's like I. And got a lot of great housing economics out there. So we didn't really get deep into the data in this one. But if you want to see my take on housing data, inflation, the printing press, all of those things, macroeconomics, you can find all of that at my YouTube channel.
Oh my God, round two, economic deep dive.
Let's do it, Brandon. I really
For
enjoyed this.
sure.
This was fun.
Sign me up. Oh my God, yeah. Now you got me all excited. I want to talk about that. We'll save that. We'll save that for the next one. George, thank you so much for taking the time. Really appreciate it.
All right. Thank you so much for the opportunity. I had a blast.
Absolutely. And thank you everyone for listening. Until next time, take care.